Rob, as we were talking about in the last segment, an active week of headlines involving tariffs and market reactions to the headlines involving the tariffs.
Right. We've, our listeners have obviously been seeing a lot of information on it. We're following it. We're trying to put out some information to describe how we view it. And again, we keep talking about consistency, and we're hoping that at this point people will really pay attention to the big picture.
Well, and it really underscores, we were talking about this before the break, it really underscores this notion of how difficult it is to think that you're going to kind of be able to market time and get out and wait it out and see how things play out and all of that. If you're an investor and you're selling out on last Friday or selling Monday, lo and behold, out of nowhere comes Wednesday and the tariffs get suspended and the market rallies, depending upon which market index you're looking at, 10, 12% in a single day. And what's interesting about that is that there is a lot of historical precedent for that kind of thing happening, isn't there?
Sure, there really is, because we've talked about this before, that a certain number of days per year can really give you the most of your return over that period of time. And so sometimes the best day, like a day we saw on Wednesday with that huge number, it followed a previous day that had some pretty low numbers. And so you see the market kind of drop. If people get nervous and say, well, I need to get out, that's the time when you're about to see maybe a nice little bump up. If you miss it, it's rough.
Some of the market's very best days are, unfortunately for human psychology and probably your stomach, clustered around some of the market's very worst days. What we saw on Wednesday was the fourth largest swing. In spot number one was the day after Black Monday back in 1987, and then in spots 2 and 3 were days that happened during the course of the financial crisis. I wish I could tell you, our listening audience and everybody else, that at the end of the day, once you get one of those days, then it all passes and everything is sunshine and roses again. Unfortunately, that's not the case. These days happen while the crisis or while the headlines are continuing to unfold, and that's certainly what we saw. I mean, it wasn't like after Wednesday the market just went straight up every other minute after that.
Right. Now I always tell our listeners and people in the office that we look at the bigger picture. Over multiple years, this market had a run for a couple of years. So if it's up dramatically and then it had a slight pullback, maybe a mini correction, and then the tariffs hit and had another little blip, but then we had that uptick on Wednesday. The numbers aren't always as bad as you seem, but the news media makes it sound like it's...
How quickly we forget that 2023, 2024 were the best back-to-back years in over a quarter century. I mean, it's just quickly forgotten. And so, we believe in providing perspective and informing our clients on a regular basis. We were telling the story of how we talked to somebody for the first time ever this past week who, just wasn't getting any feedback or any guidance or insight into what was going on. And they had pushed all their account to cash a few days earlier, and a pretty significant impact that has. And one of the things we did is we kind of gave some thoughts to our clients on Monday morning of this past week. And Rob, I do think that that this is a headline type of an event that in the email I compared to COVID, I compared to 9/11. I didn't compare it to the dot-com bubble bursting or the financial crisis of 2008. And the reason for that is I draw the distinction that, when you think about 2008, those were significant symptomatic problems in the economy, right? There was a lot of debt outstanding and just too much debt. And so ultimately, that was a systemic economic problem. When you look at 9/11 and kind of what transpired there, you look at COVID, those were all sort of external events, clearly having an economic impact, but not the other way around. And I think that's the distinction, and I put the tariff conversation into that as well. The good news is that, by the time COVID happened, by the end of the year, the market was setting new highs. By the time the year closed in in 2001, the Dow was higher than where it was on September the 10th. So that's sort of the perspective and the background that we shared with our clients this week. But boy, it's just so important to just have that overall perspective.
Right. You make a good point. We name all these events, and they did have an effect on the market in the short term, but then every so often the market hits an all-time high. If you just look at, say, well, what has the fund done over the last 15 years? The numbers are very strong. You sometimes forget there was a lot of volatility in between, but those that bought and hold quality were rewarded.
Yeah, and Rob, that's a very good point. You got to have a well-balanced portfolio. You got to have a well-diversified portfolio. I mean, that's always core, right? Any of our comments that we've ever made on this show sort of assume that in the background, right? Because it doesn't work if you've got a concentrated portfolio, or if you've got a portfolio that's all in just the same types of stocks. So, that's where we will often talk about one of the things that we do for folks when they first come into the office is we kind of run that analysis. We run a report that really looks behind the curtain at what it is that you actually own, and where you own things. What type of sectors? What's the concentration? All of those kinds of things are part of those conversations that we have at the office.
Right. I like that report because it'll take individual investments, mutual funds, insurance-related products, and just give you one large summary, which is really at times you want to know, how is everything working together? It's a great report.
No, absolutely. So for those that are listening that maybe don't have that perspective or insight into their individual portfolios, we encourage you to visit our website at nelsonfinancialplanning.com. There you can ask for one of our absolutely free consultations where we will, as always, kind of run that analysis and let you see what it is that you actually own across the board in your investment portfolio. So, let's shift some gears, Rob, and talk a little bit about Social Security, particularly this Windfall Elimination Provision. Tell us a little bit about what this is and kind of where it came from, because all of this has now changed dramatically.
Correct. So the Windfall Elimination Provision, it's kind of addressing people that worked for a government job and then may have also had an outside job, and so they're going to get a pension at retirement from the government job, and then they also qualify for a Social Security benefit. And so Social Security was trying to make sure they weren't doubling up. So, back in, I guess it was 1983, they decided to put in this provision that said, okay, if you're getting a pension from the government, we're going to have it offset the amount of money we send you for Social Security. The goal was somebody who worked just for a job and fully had Social Security being the money that was put in for their benefit, somebody shouldn't get that full benefit and a windfall per se from getting a government pension. But they called it the Windfall Elimination Privilege because that's what they were trying to do, and they just didn't want anybody to get anything that was extra. The great news is what's bringing us to where we are today is that's been eliminated by that Social Security Fairness Act. That was passed in January of 2025, and the whole thought was we really shouldn't be penalizing these policemen, these officers who have been working, and they're going to get them back up so that they won't have that elimination. And they're doing a couple things. They're going to increase your payment back up to where it should be, and they're going to go back retro for the last year, give you a lump sum payment to kind of catch you up to what you should have had all this time.
Well, and those letters certainly have been going out. My mom got one,
right.
And so I thought it would be a good topic to talk a little bit about the concept behind that Windfall Elimination Provision and what its impact is. So we're going to continue that piece of the conversation after we return here on Dollars and Cents with Joel Garris and Rob Field.